Hey everyone, Dan Longman here, NFM Lending, and I'm joined once again by my business partner, Ken Zorvich, and we're just going to talk a little shop. We want to get into mortgages. I know people out there are curious as to what's going on in the market with housing, with interest rates. So we're going to dive in. I'm going to ask Ken a couple questions here, and hopefully you guys enjoy it. All right, Ken, so let's start off like we always do, always a hot topic, interest rates,
For
right?
sure.
Yeah, we can't get this question enough. People are definitely concerned. So tell us real quick, what are your thoughts? Well, first off, where are interest rates and kind of what's your gut feeling as far as where rates are going to go? I know you don't have a crystal ball, but where do you think rates are going to go in the short term and then, through the rest of this year as well?
Yeah, so right now rates have found a home sort of in this high 6% range, right? If you got lucky, maybe you got someone in the mid sixes, but it's been bouncing in the mid to high six range. I would say, what are we going on almost 2 months now, right? Since kind of like mid January, it started to make a dip down, and it's been kind of in a slow progression ever since. But through the month of March, we've kind of leveled off. We've found our new home, so to speak. What's interesting is if you look at what the market is doing. When I say the market, I mean investors in the bond market, right? So just to back up for a second, remind everyone when there's activity in the bond market or the mortgage-backed securities market, which is like a bond, when people are buying those for guaranteed returns, it's a safe investment, then you see the yields go down and rates come down, right? Like simplest way to understand it. Back at the end of 23, investors started to try and get ahead of what the Fed was going to do or what the market was going to do, right? And so they would speculate on the bond market, and they would start buying up bonds, and they'd be, pushing yields lower. And we saw at the end of 23 to begin 24 rates come down. And then economic data didn't support those rates staying down. So what happened? They sold off. And then they did it a little bit again in the fall of 24, right? September time. We had this run down because economic data maybe was pointing to, and they're like, oh, wait, maybe the Fed's going to lower rates. Let's get ahead of it again. And what happened? The economic data didn't support it, and they pulled back. I think investors are now going to be reactionary instead of trying to be, ahead of this in any way. And so they're going to wait now until this economic data comes in that would support them taking money from the stock market and running to the bond market. So I think that's why, despite all this uncertainty that you see out there, which should have triggered maybe lower rates to start coming in, between stuff with the tariff, between employment issues that are starting to arise and potentially rise of unemployment, I think they're going to wait and see what happens. And so we're just in a holding pattern right now, waiting on the next economic data to come out that should support yields going down and thus rates getting better.
Yeah, I agree. And I think it's important just to back up for people out there, like when you say pull money out of the stock market and throw it into bonds, and that's really what it's about. It's kind of like the bond market is sometimes a flight to safety, right? Like if investors think, oh man, the stock market is too risky right now, it's too volatile, I'm going to pull money out of there and I'm going to stick it into this bond that's more secure. It's a, kind of a set return that they can get, whether it's a 10-year treasury, a 5-year, a 2-year, a 3-year, what have you. So that's really kind of what Ken means when, we're pulling money out of one thing, one instrument like the stock market, putting into something a little bit more secure. And then the reverse can happen, right? You can see yields go the other way if people are pulling it out of bonds because they feel that the market is in good shape. It's strong. Hey, I want to pull my dollars out of there and put it into these stocks because they think the economy is going to recover or going to, rebound and be more of a bull market. So yeah, I agree. But there's just been a lot of uncertainty, and we know, right? The markets don't like uncertainty. So people have been waiting. And I really think, when it comes to the Fed, the two mandates we talk about, it's inflation and the job market. I really think at this point, it's jobs over inflation. And what I mean by that is, yeah, the job market has to break. We really got to see unemployment tick up for rates to drop drastically, or just to drop more than this, quarter here, 1/8% here. So that's the thing to pay attention to as far as the job market, right? And as opposed to inflation.
Yeah, 100%. I mean, it's going to be all job related because we've been stuck in this kind of mid to high two range on inflation. They want to get to 2%. Mid to high twos is not the end of the world. That's actually not a bad inflation number. But for them to get to 2%, we might not even hit it this year. Oh, we're just kind of stuck in this range here. And I think it's going to take jobs that are going to be the linchpin in all this to trigger interest rates coming down. And yeah, I mean, listen, that's been the trade-off the last few years. If people probably been happy what's gone on in like their 401ks and their investment accounts, but you can't have that and low interest rates, right? Generally, if the stock market is killing it, then interest rates can't be low. They've got to be high. So I think in a perfect world, we have more balance where people will put money in bonds because maybe the stock market isn't on fire like it's been for a few years. And that'll stabilize rates and get everyone back to some affordability.
Yes, I agree. And just to end that, as far as a stable market like you talk about or some balance, I think a rate close to 6% would do that. We've seen it. We've tested that level where back in September, rates dropped to around 6. Demand picked up, buyer activity picked up, not to the point where it's going to cause a feeding frenzy, right? Like we went through in, 2022 and 23, but it's a healthier balance. I think affordability, house prices come down, so affordability is more in play for people, but rates are not like super low where it's going to cause this reverse reaction. So, but yeah, good stuff, man. Well, let's shift gears to the housing market. It's been a rough couple years as far as not home prices crashing. That's what people have to remember. Home prices have not gone down, but the amount of transactions have. We've been bouncing around on the bottom here for the last couple years, like just over 4 million existing home sales, which is, record lows when you compare it to many years ago, and especially when we have a higher population now. So what's your thoughts like as far as the housing market? Do you see it improving this year? Is it going to continue to be just frozen? We bounce around this 4 million. So what's your thoughts on that?
Yeah, I think it's going to depend on, I really think this is going to be interest rate driven as far as if we're going to break above the expectations, which is around 4.1, 4.2 million transactions this year. I think it's going to be totally interest rate driven because buyers are just sitting on the sidelines. It's as simple as that. They're sitting on the sidelines waiting to see if something's going to happen, right? In their favor. Let's be clear, right? If something's going to happen in their favor, and what could that be? You hear prices coming down. They're not going to come down, they're going to slow down, right? And really what that slowdown does is it allows time for income to catch up to affordability levels that everyone's comfortable with. And then you talk about interest rates can help with that affordability. But I think right now with inventory rising as it is, that gives buyers more opportunity, more things to choose from, more negotiating power that they haven't had in a while. And that may be enough. But even talking to a buyer today, they were just like, look, I've been kind of waiting and this isn't going to change. So we're diving in. Yeah. And I thought, I was like, man, you and everyone else that's feeling that way. And I think that's why. I don't think we have a lack of demand. We have a lack of action. Like, I think there's a lot of demand out there, because overall the job market's good. That means people are making money. They should be willing to spend it, but they're uncertain. They want to see if there's a crack in the foundation of real estate that they can take advantage of. So they're all just sitting on the sideline, I think.
Yeah, agreed. Goes back to that notion though, right? Don't try to time the market, spend time in the market. It's never to your advantage to try to time it. It's never going to work out. If you want to be a homeowner, there's obviously, a lot of benefits to that. So now is a good time to dive in. But going back to that, look, affordability is a huge issue right now. But isn't it interesting? Like when people, these doomsayers out there with the market's going to crash, like everybody is so, traumatized from 2008. And I get it. We went through it. We lived it. But it's so much different this time around. People have equity in their property. People are sitting on low interest rates. But one thing I will say too, it's not like this national thing. You really got to look at it regionally, right? Like there's definitely places like here in Florida and Texas where there is a lot of inventory. We are above 2019 levels. But then you go up into like the Midwest and the Northeast, and they're not there yet. They're still, inventory's climbing. There's no doubt inventory's going up, but they're not at pre-COVID levels yet. So the market could be very different when you're comparing a property in the Northeast and you're comparing it to pocket areas down in Florida and South Florida particularly. So yeah, that way this whole nationwide crash, not going to happen. But could there be some price corrections in some markets where inventory is at 10, 11, 12 months that we've seen? Sure. Yeah, there could be some price declines there. But to your point, I mean, look, if you bet on real estate, it's been a good bet over the last 60 years. So, and I think people are forgetting, all the other advantages that come with buying. So yeah, look, now is as good a time as any. Rates have come down a little. We're starting to see a lot more inventory on the market. So that is all good news for buyers. Once again, you're not going to be able to time it. you're not going to be able to time it perfect. So
No, the best time to buy is when you're ready. Right? Period. End of story. Real estate's a long game that you're going to play. Don't worry about fluctuations. Don't worry about timing to see if you're getting in at the right point because look, I look at some people right now. You look at people in 2018, they were scared to buy because we were at the highest rates and highest values we had been since 2008. Do you think they regret buying? No, they don't, right? But at that time, a lot of them feared buying. I had a client I just talked to who's going to refinance. They bought in 2023, and the amount that their property has appreciated, I was shocked. But that's in 2023. That's even after COVID levels. And their property is still appreciated higher than where it was when they bought. They have more equity. They're going to execute a refinance, save some money on a monthly basis. And you even look at that and say, yeah, people were even worried about buying in 2023, and it's worked out for them. So, in inflationary times, what's an asset that always does well?
real estate.
Real estate, right?
Yeah.
So it's just been tried and true. Real estate seems to come through and overcome no matter what the market conditions are.
Absolutely. And if you're buying this as a primary resident, you're not sitting there looking to flip it, right? I mean, investors look at this with a whole different perspective, right? They are
Yes,
looking
100%.
Yeah.
Do some homework, do some math, make sure you're getting a good return on it. But primary residence, you're going to stay there for at least 5 years, maybe 7 years. Like you can withstand a lot during that time, and it's proven to be a winner for people.
Absolutely. And listen, the people take pride in their home, right? I mean, when you own something compared to renting and maybe you get up and leave every couple years, it's a different feeling. And just to be able to like anchor down and say, this is where we live, taking that pride in home ownership. That's why people buy. And that's what we're here for. All right, man. Well, good stuff. I'm going to just kind of throw you a curveball here and just completely shift gears, get out of mortgages completely here. So 75 hard. This is something now we've both done. You got me to do. You've been a big influence on me. I know you're finishing it for a third time, which is crazy. I just completed my first time, but and before I ask you about it, just real quick, we're gonna tell people what this is. So 75 hard. It's not a fitness challenge, even though there's a lot of fitness in it. It's more of a mental challenge. And for 75 days straight, you have to pick a diet. It could be any diet as long as you stick to it. No alcohol, no cheat days on either of these things. You have to do 2 workouts a day, 45 minutes each. Can't be back to back, and one of them has to be outside. You have to drink a gallon of water a day, and you have to read 10 pages of a nonfiction book, so kind of like a self-help book. I hope I didn't miss anything there, Ken. But
You got it all.
so tell us, man, doing your third round, like just what drives you to do this 75 hard, and what do you really get out of it?
So the reason I did it most recent was because the thing I've realized about it's a really good reset, both mentally and physically. And what's interesting is I wasn't really in bad shape. I'd still been doing a lot of things I'd always done on 75 hard. I probably was a little bit looser with my diet. I was definitely looser with alcohol that I was drinking prior to it. And so it just afforded me the opportunity to kind of put myself through a rigorous routine, which I've realized just helps me reset mentally. And I just think I needed it. Like I just needed something to reset me. Now, what I realized this most recent time was that I didn't do previous times is there was a few things I did diet-wise that I was more vigilant than I was previously. And then even with the exercise, I think I was more, I would say maybe a bit more advanced in what I was doing exercise-wise this time than I did previously. It was almost like I just got through stuff last time. And this time I kind of was like pushing myself harder in some of these exercises. And what I found was I saw like different improvements or gains that I didn't see previously from doing it. And so what it does is it reminds you that no matter where you're at, no matter what your age is, you can actually make it. Like there's more there, right? Like there's more there where you can level up if you want to try and level up. And it also reminds you that you can reset at any point in time. Right? Like no matter what's going on, it's just kind of like push the reset button. And sometimes the harder, the better. Like pick, first of all, there's no good time to do it, right? Like,
Yep.
I don't care if you think you're going to try and do it at the beginning of the year, middle of the year, end of the year, like never a good time to do it. But you prove to yourself a lot when you do it, right? Like, what did you find when you went in and did it?
Yeah, man. No, I mean, first of all, I got to commend you again for doing it 3 straight times. But yeah, I mean, First off, you do learn a lot about yourself, but I think one of the things, like, I kind of went in, and I think I got this from Nick Saban, but it's like, what does it take to actually break you? Right? You really don't know how far you can push yourself, right? A lot of us don't. The first thing when someone hears about 75 hard, your first reaction is, "Oh, I could never do that." Right?
Right.
Or someone be like, "I could never do that," right? But it's, the people that make probably the best car engines or impact windows, they've probably tested them to their breaking point.
Yes.
So for me, it was just more like, yeah, I don't know how far I could push myself. So for me, it was just curiosity. But I'm like you, I did need a reset. I did do it at the beginning of the year when you come off the holidays and all the stuff you drink and eat. I was just like, I'm done with it. And I wanted to do something more than dry January. But honestly, I wanted to really challenge myself. I really wanted to see, I set this goal and be disciplined, because that's what it takes. I mean, when you're doing 75 hard, forget motivation. You'll be motivated for the first couple weeks, right? You're cruising through the first couple. You're like, this is awesome. Then you're going to hit some days where motivation is long gone and discipline has to take over. So yeah, man, I just learned a lot about myself. I mean, from just diet and the mental, I think, strength that it takes to get through those hard days and push through the workouts. And yeah, there was a sense of pride when you come out of the other side of it, right? There was something that you knew, you're like, oh yeah, I can do that. Like, oh wow, I
I can do hard things, right? I can do hard things.
I can do hard things. Yes.
Yeah.
And your body rewards you too, right? Your body will reward you with better sleep and you have more energy. And so, yeah, that was the byproduct of doing it, right? There was some benefits physically and mentally from it.
The other thing too is you realize what you're putting in your body. Like your body starts reacting in a very efficient way when you're limiting what you're putting into it. And then you start to realize, wow, like I didn't understand what I'm putting into my body, like how important that is. And look, I don't ever, I'm not one of these people is like on a stump for telling people to go do it. It's like, hey, if you want to do it, right?
Yeah.
But if you ever want to talk about it, we'll talk about it. But that was one thing where, yeah, if you really want to understand the food, the alcohol, like, you name it, all that stuff you're putting in your body, you want to know what it does to your body, try restricting and you're going to see the differences of like, wow, this is what it really does. This is what it really does to your body. And then you'll be able to decide, do I want to keep putting that into my body or do I not? Right. So,
yeah. And I think the other last thing I was going to say about it's like, people are at, why 75 days, right? Some people have this thing, well, 30
that's a good
days.
question. Why 75, right?
Yeah.
Why not a dry January or something like that, or 30 days?
Absolutely. But I think we both can attest to it's very interesting because the cravings, like there's some things like, alcohol, sweets, whatever you eliminated from your diet, you still crave some of that stuff. At least I did 30 days in, 45 days in. But it's very interesting, man, when you get to like day 60 and you start to get into the early 70s, you realize like those cravings go away.
Yeah.
So now you've really developed a habit. And I think I can't speak for most people. I can't even speak for you. But when you go that long, you almost don't want to go back to your normal routine because you've created a habit and you've been disciplined for this long, right?
Yeah. It was interesting. Someone said to me the other day, they go, so I know you just did the 75 hard and you like kind of take care of yourself. Like, do you just not, like when you see a cookie, do you just not want to eat the cookie? Like, I don't understand. Is that what it is? And I had to stop and think about it. And I'm like, well, no, of course I want to eat the cookie. Like, who doesn't want to eat a cookie? What I know though, by refusing to eat it is I'm in control and I don't have to feel like I'm a slave to that. And I can decide whether I want to or not. And that feels better than actually eating the cookie. Right. Like,
Yes.
but you have to get to that point to then understand that, you know what I mean? Like you have to be able to push yourself to that point to where you can see the other side of it, because just on the outside, yeah, that seems like crazy talk. Like I just said, because cookies taste really good.
It's funny you said, well, it's all that like sometimes delayed gratification. You want to even prove to yourself that I don't have to indulge just because there's cookies.
I don't have to.
Yeah. I don't have to. And then when you're doing your 5:30 in the morning workout, or you'll sit back and remember and be like, see, you didn't take the bait there.
Yeah.
You feel good about it. But it's funny you say that real quick because my weakness is pizza. And I did no bread, right? So just recently, my wife ordered pizza for the kids, and I was in the kitchen, and I left the kitchen. I had to leave. And she's like, you don't want pizza? She's like, you're off your 75 hard. I'm like, no, I do want pizza. And I know I'm not doing 75 hard anymore. But I just want to resist it. So I said, do me a favor. When they're done eating it, can you put it away? She goes, you're not going to come out to the kitchen. I go, I'm not going to come out till you put it away. Out of sight, out of mind. But yeah, I felt good about not indulging. Not that I won't eat a slice of pizza, but
Yeah.
it was my weakness. And now I'm just trying to avoid, bread as much as I can.
Percent. I love it.
Anyway, man, good stuff. We are not 75 hard, fanatics here or anything, but it is a pretty cool challenge. I think anybody that sets their mind to a mental and physical challenge and accomplishes it, it's something to be proud of. And
Yeah,
you
get
learn a lot.
uncomfortable. It's okay.
Yeah,
We'll get uncomfortable.
All right, Ken, good stuff, man. Well,
Awesome.
I'll see you soon.
Yep.
Take care.
Thanks.